Hi everyone, there's another big and potentially volatile week in September coming up in financial markets, so I will do my best to help you prepare for it. We begin the week with a reaction to the German election. Then European inflation data will keep the focus on inflation, while Evergrande and the Fed tapering concerns continue to play out. GK Invest presents the week ahead. My focus for this week will be on the German election, where voting took place on Sunday, September 26, and any repercussions should be felt in markets this week. In recent times, German elections have been very stable and predictable with minimal market reaction. This one could be different though, because Angela Merkel is stepping down after 16 years as Chancellor. That means a new leader and new policies that can affect the European economy, international trade and specific German industries, not to mention the stocks of the companies in those industries. I won't delve into individual stocks, but let's look at what could happen to the DAX 40 index and the euro currency. So by the time you're watching this video, we should know who the next Chancellor is, but might not know which parties will be in the government coalition. So what combination of coalitions are analysts expecting to be good and bad for markets? Well, there are 5 parties in the running to be part of the government. 2 Conservative, which are the CDU and CSU alliance, as well as the FDP. 2 Liberal parties, the SDP and Greens, and 1 more hard left called Die Linke. First, the results that should be positive for the DAX index and for the euro. Number 1, a 2-party coalition of the CDU and SDP would be a continuation of the status quo, so probably wouldn't cause any upset. Number 2, a 3-party coalition between the CDU and SDP and Greens is the most expected result and should mean a bit more government spending, but the power split would limit very meaningful change. Now, the results that should be negative for the DAX and euro. Number 1, any coalition with Die Linke would create concerns about an anti-business climate in Germany. And 2, a coalition of the FDP might mean a return of austerity policy and reduce the chance of the EU Recovery Fund getting extended. But remember, with elections, there is the knee-jerk reaction in markets and then the longer-term impact on the economy, which are not always too easily to separate beforehand. Oh, and guys, can I just please ask that you give a quick tap of that like button for the YouTube algorithm, and it will really help a lot more people see these videos. Okay, so let's round off with the economic calendar. Now, as I mentioned in the intro, Eurozone and German inflation data points are probably the main ones to watch. It's a delicate time for central banks, including the ECB, which are making plans to taper bond purchases. The risk of a policy error is high. Central banks might either be wrong to start tightening policy as the economy slows down, or they might have misjudged the strength of inflation, in which case they are behind the curve and need to speed up rate hikes. Euro-dollar especially will move as markets try to predict which way the Fed and ECB pivot on monetary policy. Elsewhere, China data will be important to watch in the context of the issue around Evergrande. Right, thanks everyone, good luck trading this week, and make sure to click on subscribe so you don't miss the next episode of The Week Ahead.